Ladies and gentlemen, good day and welcome to the Kanpur Plastipack Limited Q2 FY26 earnings conference call. As a reminder, all participant lines will be in a listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Mamta Samat from Ed Factors. Thank you, and over to you, ma'am.
Thank you, Muskan. Good afternoon, everyone, and welcome to the Q2 and H1 FY26 earnings call of Kanpur Plastipack Limited. Today we have with us Mr. Manoj Agarwal, Chairman cum Managing Director, and Mr. Shashank Agarwal, Deputy Managing Director. We will begin with opening remarks from the management, followed by an interactive Q&A session. Please note that this discussion may include forward-looking statements, which should be viewed in conjunction with the risks and uncertainties that the company faces. I now hand over the conference to Mr. Manoj Agarwal for opening remarks. Thank you, and over to you, sir.
Thank you, Mamta. Good afternoon, everyone. I am pleased to welcome you all to Kanpur Plastipack's earnings call for the second quarter and half-year ended 30th September 2025. I appreciate your continued interest and participation. After a strong start to the year, I am happy to share that Q2 and H1 financial year 26 have further strengthened our growth trajectory, both in financial and operational terms. The momentum has carried on. The quarter reflected the continued benefits of our strategic transformation, focus on efficiency, and disciplined execution across all business segments. During the first half of financial year 26, the total income increased by 20% year-on-year to 34.83 crores, while net profit rose by more than 52 times year-on-year to 14.47 crores. The earnings per share was 6.26 as compared to just 0.13, reflecting a strong turnaround and profitability. In Q2 financial year 26, the total income stood at 166 crores, up 8% from 153 crores in Q2 financial year 25. Net profit increased by 4 times to 756 lakhs, translating to an EPS of 3.25 compared to only 0.67 in the same quarter last year. This performance was driven by strong demand in our FIBC and fabric segments, better product mix, value-added offerings, and sustained operational efficiencies. Our balance sheet continues to strengthen. CRISIL rated our debt facilities at BBB+ for long-term and A2 for short-term facilities, underscoring our financial discipline and improved risk profile. On the strategic front, we completed the acquisition of 76.19% stake in Valex Ventures Limited during the quarter. The acquisition provides us with direct access to high-value, food-grade, and UN-certified FIBC customers in the UK and EU markets, aligning well with our goal of expanding global presence and enhancing value-added product offerings directly to the market. The board has accorded its approval, enabling the company to enter into a 50/50 joint venture with Goma SPA Italy, an Italian company engaged in the manufacturing of multi-filament yarns, high-performance polypropylene yarn, and technical textile solutions for establishing a joint venture company in India. This joint venture will introduce high-performance Tasclan yarn technology to India, marking our entry into a high-margin technical and luxury textile segment. This strategic diversification will also enable us to leverage our polymer processing expertise and enhance earnings quality over the long term. We have also planned a capex of 105 crores for capacity expansion, process modernization, and diversification to be implemented over the next 12 to 18 months, for which the board has just accorded us an in-principle approval. Under this project, we propose to invest 58.04 crore in a needle punching non-woven project, being a greenfield facility to enter high-growth segments like automotive interiors, shoe insoles, and artificial leathers and carpets. Additionally, a sum of rupees 47 crores shall be spent in the FICBC division at Unit 3 at Gajno Road. This will further add about 1,200 metric tons of conversion capacity next year, ultimately with an incremental target of 6,000 metric tons over the next 5 years. Operationally, our focus remains on margin expansion, cost optimization, and process automation. We continue to invest in digital tools, lean processes, and efficiency improvements across the value chain to build a resilient and scalable business model. Looking ahead, we are confident that the strategic initiatives undertaken in H1 financial year 26, including the Valex acquisition, Esicoma joint venture, and the capacity modernization, will drive consistent, profitable, and sustainable growth, positioning Kanpur Plastipack as a preferred global partner in industrial packaging and technical textiles. I now invite our Deputy Managing Director, Mr. Shashank Agarwal, to share detailed insights on our financial and operational performance for the quarter and half year. Thank you, everybody.
Thank you very much. Good afternoon, everyone. I will now take you through the detailed financial and operational performance for the quarter and half year ended September 2025. For Q2 FY26, the total income stood at 166 crores, an 8% increase year-on-year from 153 crores in Q2 FY25. On a quarterly basis, income was broadly stable, reflecting steady demand in both exports and domestic markets. The EBITDA stood at 16.33 crores, up 44% year-on-year, with margins improving from 7.4% to 9.8%. The net profit came at 7.56 crores compared to 1.44 crores in the previous quarter. That's almost a 4.25 times increase year-on-year, driven by operational efficiency, product mix improvement, and better export realizations. For H1 FY26, the total income stood at 348.34 crores, up 20% year-on-year, with an EBITDA up 73%, being 31.87 crores, and a net profit of 14.47 crores, compared to just 28 lakh rupees in the H1 FY25. This performance marks one of the strongest half-year results in the company's history. Our export business continues to be the key driver, contributing 74% of the revenue, with a volume of 6,600 metric tons valued at 119 crores during Q2 FY26. Europe continues to remain our largest market with 51% share, followed by a staggering 27% in South America and 17% in North America. The rest is contributed by Asia. The balanced geographical mix helps insulate us from regional demand fluctuations and also ensures steady utilization across our manufacturing units. Operationally, as I said last time, we continue to focus on efficiency enhancement, automation, and debottlenecking across manufacturing facilities. This quarter, our focus remains on improved warehousing and logistics and throughput improvement with reduction in turnaround times. We are in the process of deploying a modern automated warehousing system that will introduce advanced racking and retrieval infrastructure for improved inventory control, space utilization, and operational safety. Sustainability continues to be at heart of our growth. We are steadily progressing towards our goal of sourcing over 60% of our power from renewable energy, alongside our zero liquid discharge and recycling initiatives, reinforcing our commitment to environmental stewardship. During this quarter, 53% of energy was sourced through solar. The company remains net debt light, maintaining a healthy balance sheet and a strong cash flow generation. With the consolidation of Valex Ventures beginning Q3, we expect stronger European presence, better price controlling, and margin improvement. The Essigoma joint venture is expected to contribute meaningfully after commissioning and generating a meager annual revenue of only 25 crores in the first couple of years. This is a very long-term project that would drive us in a luxury textile segment. Our 105 crore CapEx program focus on capacity expansion on FIBCs and diversification into needle punch nonwovens will be the key growth catalyst for the next phase of company's growth. The diversification into nonwoven fabrics will mark KPL's entry into a fast-growing market with applications in automotive, shoe insoles, carpets, and artificial leathers. The project will be led by an industry veteran with over 25 years of experience in this sector and will open new avenues for growth in technical textiles. Implementation will take place over the next 12 to 18 months in a phased manner. To summarize, Q2 and H1 FY26 have demonstrated profitable growth, margin expansion, and financial prudence. With the ongoing strategic investments, product diversifications, and a robust order book, we are well positioned to sustain momentum in the second half of the year. Thank you. We can now begin with the question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from question queue, you may press star and two. Participants are requested to use headsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Umesh Shah from Moneyvisors. Please go ahead.
Yeah. Am I audible?
Yes.
Sir.
Yeah. So thank you for the opportunity and congrats on a good set of numbers. So my first question is on the margins front. We are doing significant CapEx and obviously are taking new initiatives, and we have clocked a decent set of margins in this quarter and H1. So when you talk about sustainability of margins, is the figures that we have clocked this half sustainable, or it can go upwards also going forward?
Yes. So as I said, these numbers are coming out of the margin increase that's happened because of the situation in the market. Not only the situation of the market, but also increased volumes and diversification into different markets. So going forward, these numbers are expected to remain sustainable.
Okay. So and on the tariff front, have we had some news, considering that there are news of India and US cracking a deal by end of the year? So tariffs scenario, can you just explain what news is there currently?
Sorry, could you repeat your question, please?
So on the tariff front, US tariffs front, we were also subjected to higher tariffs. So now when US and India are almost near to crack a deal on the trade deal, how is the tariff scenario coming out?
So it continues to remain a risk and a challenge until that reversal happens. Going forward, if the tariffs remain as it is, then it's a risk on the business. But if this reversal happens and there is an agreement that is achieved within this calendar year, then we will see extreme robust growth in the last quarter of the financial year with the demand going up again.
Okay, so
Up till now there has been limited direct impact.
Okay, sir. So and my final question is with the respect of the JV with Essigoma. So you said in your comments that the expected revenue for the first couple of years will be 25 crores per annum. But once going forward, maybe say for example in the next 5 years or 6 years, what is the quantum of revenue that you were expecting north of 25 crores?
It's very early days to comment on it. Obviously, when we are venturing out into a new business division, and that too a joint venture with a global market leader, there are plans in place which are extremely long-term in nature. This is just the first phase of that project that we have to see on how it unfolds in the next couple of years. There are no significant capital expenditures for this project, and it is more of an experiment to begin with, and if it works, then we have a huge upside potential.
Okay, sir. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Disha from Sapphire Capital. Please go ahead.
Hello.
Hi, we can hear you. Yes.
Yeah, thanks a lot for the opportunity. So I have a couple of questions, sir. So firstly, on the JV, because you said it's too early to comment on the revenue potential, but at least on the margin front, because this is an entry into very high performance yarns. So what sort of margins will we see here, sir?
So, I mean, for the joint venture itself, the margins should be between 5 to 10%. But as I said, that this is just step one. It's a very long-term project, and we have to go step by step because it's a nascent market, it's a new market, and it's the luxury segment, so it takes time to break in.
Right. Okay, all right. And so the greenfield plan that is coming up, what will be the timeline? When will we expect commissioning and revenues to flow in from that segment?
So, revenues should start flowing in H2 next financial year. And the commissioning should be completed by H1 of the next financial year.
Commissioning by?
H1 next financial year.
Okay. So because we are now moving into very different product segments, and also now we're going into this non-woven segment. So how do we see like the product mix evolving, and how do we see the contribution changing going ahead?
So for the next couple of years, we see that non-woven should contribute to almost 20% of our total product mix and revenues. It should also contribute to almost 20 to 25% of our EBITDA margins on the increased EBITDA and on the increased revenue.
All right, so 20% is what we expect from this segment.
Yeah.
Yeah. Okay. All right. And so in general, like what is sort of the growth guidance for this year and FY27 going ahead?
So there is a lot of volatility that is there because of the tariff issues that are currently going on. We will see more visibility probably by January next year. The European industry in general is doing pretty well, and manufacturing is increasing in the US, which remains to be our two consistent markets. Even the agriculture output in South America has been good. So the global demand will continue to remain robust.
Okay. All right. All right. Thank you, sir. That'll be it from my side.
Thank you. The next question is from the line of Dhruv Mimani from Nivesa Investments. Please go ahead.
Hello.
Hello, we can hear you.
Hi. I just wanted to ask, what's the current order book of the company?
The current order book?
Yeah.
Yeah. So the current order book is about a couple of months at the moment.
Okay. Thank you. And my second question is, what's the current Japan market revenue, and are there any expansion plans in Japan?
So we are continuously working on the Japanese market. As we speak, one of our key executives is there in Japan. The current revenues are insignificant at the moment, I would say. It is probably less than about 2 crore rupees in a year.
Okay.
But these are early days. We have to see the opportunity where it lies. This year, Europe and USA have been very strong. So I mean, we have to have our geographical distribution in place so that if there is a market that's doing well somewhere, then there is another market that's not doing well at that moment.
Okay, sure. And so lastly, my question is, what's the source of funding for the 100 crore CapEx?
So broadly, it is through internal accruals and about 35 crore rupees of debt should be taken.
Okay, thank you so much.
Thank you. A reminder to all the participants, you may press star and one to ask question. The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Hello.
Hello, Saket ji.
Namaskar, Chetan ji. Pranam,
Namaskar.
and thank you for the opportunity. Firstly, sir.
Welcome.
Yes, sir. Dhanyawad, sir. Sir, firstly, very elaborate and descriptive investor presentation, sir. It answers maximum questions, so a lot of effort has gone to it, and we hope that there is a continuity of the definition of information that we have chosen this time. So जैसे हम अपना फर्स्ट हाफ का EBITDA देख रहे हैं at closer to 32 crore, and our endeavor to improve on percentage in the FIBC segment on the higher side, what should be the conservative EBITDA trajectory for H2, taking into account that firstly the tariff impact and secondly the strong order book जो Chetan जी ने अभी mention किया था.
So we do not see any significant changes in the trend that are there. It should remain, the revenue and the margins both should remain similar to what it has been in H1.
Okay. Since sir, you have been alluding to the fact that we are moving more towards the higher proportion of FIBC in the total profile. So
Correct.
the percentage will remain same what we have exit for quarter two.
So quarter two is always a quarter of festivals and rainy season, and that remains a challenge. And then quarter three also there are festivals and the harvesting because of Diwali and the Kharif harvesting that happens. Quarter four is when you should see a significant change in the product mix ratio.
Okay. So that we have to look for quarter four for the improvement in
Trend wise it is already happening, but a significant change should happen by then.
Sir, you have explained to us the recently announced CapEx. So what should be the asset turnover going ahead when we are deploying this 105 crore going ahead, especially for the greenfield activity? I think so that will take some time. So if you could just give a long stop date also, and what should be the asset turnover?
So the greenfield non-woven project estimated investment is about 55-60 crores, and that and full production will give us about 120-125 crores turnover additional. Because the segment that non-woven project is catering to is again highly diversified. If you see the presentation, it says that we are targeting three major segments: the automotive segment, the shoe lining segment, and the carpet backing segment. The carpet backing, the carpet laying segment. The carpet segment is seasonal in nature also. So shoe lining, we have an advantage. We are in Kanpur, and so we are able to market that product there. This is the basic funda.
Okay. And sir, in your slide where the strategic growth and diversification initiative is mentioned, we have mentioned about the FIBC addition capacity to the tune of 6,000 metric ton. That will happen in the next five years के लिए बताया है. So what should be the addition annually, sir? What should we expect out from there? And what is the total investment that is going to this only in addition of the FIBC capacity?
Yeah, so it is about 47 crores. The investment.
Okay.
And your second question was that what is the incremental capacity every year, right?
Sir, yes, sir. Yes, sir. You have mentioned 6,000 in next 5 years.
Yeah. So that will be 1,200 tons every year.
Okay. So, FY26, 27, when March 27, we will be seeing 1,200 tons to be added. That would be the first capacity
Correct.
to be inclusive
Correct.
of.
Correct.
Right. So
FY27 will be 1,200, FY28 will be 2,400, FY29 will be 3,600, and so on.
Okay. Sir, as you mentioned about the order booking part, earlier, sir, we used to have visibility for weeks, or you mentioned something about the month. I missed your part. So
it is 8. So the current order book is between 8 to 9 weeks.
8 to 9 weeks. Okay. That is 2.5. And the average has been
8 weeks is 2 months.
2 months. Yes, sir. So, sir, this is the average we have, or do we see traction in the same?
Sorry?
Sir, this is what the average has been, or
No,
because of the impact of...
This is a little bit more than the average.
Okay. Sir, and two small points. One about the Valex acquisition. Sir, I think so what should be the potential? I think so earlier you have spoken about that Valex has huge potential in terms of the market penetration and then the improvement in profitability. So if you could just give us some color, how will this be a value-added investment in the fold of at our company, Kanpur Plastipack?
So, I think Valex is about at... Sorry, how much?
1.5 million.
Is at about 1.5 million pounds of revenue. And
Yes,
it
sir.
should grow at a consistent pace of between 5% to 6%.
Okay. And margin contribution?
So the gross margin, the gross margin in Valex Ventures is at about 15 to 20%.
Okay. And sir, currently we are facing some impact because of the U.S. tariffs. So we have borne any of the tariffs on our part, or the entire pass on is to the...
We have not borne any tariffs yet, and we do not expect to bear any tariffs. That is not the expectation of either the end customer or the distributor.
Right, sir. Sir, I'll join for the following, for my follow-up, if any. And sir, once again, sir, thank you for the very elaborate discussion and the presentation, sir. Thank you.
Thank you.
Yeah.
Thank you. The next question is from the line of Rohan, an individual investor. Please go ahead.
Hello, sir. Am I audible?
Yeah.
Yeah. Thanks for the opportunity. I have few questions regarding your JV and the CapEx plan you have laid out on the presentation. So, sir, for the JV with Epigoma, we are expected, revenue of 25 crores per annum. So can we know where we are right now in setting up stage, like is the facility already set up, or where we are in that stage?
So the agreement should happen in this month.
Okay,
And we should expect commercial production by Q1 next financial year.
Okay. Gotcha.
Because there is a process of technology transfer. There's a process of technology transfer in this joint venture as well, which would take some time and training.
Okay. So this will require 1,000 metric ton of capacity. So have we found out, is it going to be a greenfield or a brownfield project?
It's a brownfield project.
Okay. So what units, in which unit are we going to use this?
Sorry?
Which unit from, like, we have 4 units, right? And out of which unit
Unit 3.
to contribute to unit 3?
Unit 3.
Okay. Okay. And sir, regarding our CapEx plan of 105 crores, and like for and that's for capacity expansion in Unit 3, where you said that, 1,200 metric tons per annum would be added every year. So, what would be when would the trading division warehouse be constructed and be ready?
So trading warehouse is a very, very small investment. It is just about 1 crore or even less than that, and that would start by January.
Okay. Fair enough. And so this 47 crore would be equally divided over the 5 years, or we are going to do major of CapEx in next 1 or 2 years, and then we'll be doing minor CapEx as and when we add capacity?
So 90% of this investment will happen in the next 12 months.
Okay. And sir, regarding our entry into non-woven products, so can you just give us some brief regarding the plant size, the capacity, where we are going to, install this plant?
So, as I already said, and it's there in the investor presentation, the total expected revenue on 100% utilization is about 120 crores. It will cover automotive segment, artificial leather, the shoe industry, and carpets.
Yeah, I get that, but where would be our plant be?
There, physical.
Where? Yes, sir.
Unit 3.
Okay. Everything, all the capex are going to be added into Unit 3.
95% of the capex is happening in Unit 3.
Okay. Sure. Okay. Any more questions I would have, I will get back in line. Thank you.
Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask question. The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Yes, sir. Sir, the initiative that we have handed over to Granthon, when will we start expecting the results? That उनको क्या timeline दी गई है in terms of bringing?
I'm just requesting my CFO to answer that.
Hello, sir. So the work is done in the phases. So the first phase work will be done in this quarter itself, and we will give the report in the coming board meeting. So and the next phase will be done in the next quarter, and the assignment will be headed and ended with this manner.
Okay. And sir, what have we exactly worked out with them? What kind of efficiency or cost savings they have? The program will be offering to us in terms of the margin.
So work is going on. There are specific scopes that have been given, which are related to, some of them is related to efficiency management. There is some risk identification, and then there is some automation. There are multiple things that have been given to them. Work is going on. We should get some output in the next quarters.
Okay. Sir, post exit of this quarter, wherein our FIBC contribution percentage is X, what should be the additional percentage we can expect for the remaining part of the year and then the next year? As in your way forward, you have mentioned that we are adding more capacity, and then we are also going ahead with the debottlenecking exercise. So, taking these two into account, what should be the trajectory of the contribution from the higher margin FIBC stage exit of the first half?
H2 upon H1. So H2 should be about 15% higher than H1. And next financial year should be about 25%, as a full year, it should be about 15% higher than the current financial year.
That is a significant number, sir. Yes.
It is a very significant number. Yeah.
Okay. And that would be definitely margin accretive for us in terms of
Yes.
the switch that is happening. Okay. Sir, there is also the major component of human resource that is involved. So उससे हमारा क्या work है, and I think so there are several programs that we are also running, what I read from the annual report, in terms of educating the workmen especially on the stitching side. So
Yeah.
automation पे क्या कार्य कर रहे हैं सर, and इसमें क्या है सर, थोड़ा प्रकाश डालिए.
So I'll answer it in three phases. So one, automation is an ongoing continuous exercise. We are always identifying opportunities where we can do it, and that's something that continues to happen across the year. On the stitching side, we are training and retraining and creating awareness amongst new people who want to join stitching and who can get trained to stitch. So now there are two training schools that we are operating. One is in Unit 2 and the other is in Unit 3. Because the future expansion is going to come in Unit 3 for FIBC. So that has also started. And the third point is that if you see that we have set very, very small targets of only 1,200 tons per annum for FIBCs, and we are spreading 6,000 tons over the next 5 years. That is keeping in mind that manpower availability is decreasing with time in the country, because everybody is wanting better skilled roles and better paying jobs and more white collar jobs than blue collar jobs. So that's keeping that in mind that we are setting extremely conservative targets.
Okay. Sir, in the presentation, I was unable to find out what is our current capacity in the FIBC segment and our utilization levels. If you could just help me out with it.
So the current capacity is 18,000 tons, and we are at 14,500 tons at the moment, which is 82%.
Okay. And what should be eyeing, sir, for by exit of H2?
It should be between 85 to 86%.
85 to 86%. Right. ठीक है सर. Thank you. धन्यवाद.
Thank you. A reminder to all the participants, you may press star and 1 to ask question. The next question is from the line of Aniket Redkar, an individual investor. Please go ahead.
Good afternoon, sir.
Good afternoon.
So, sir, I have few questions regarding our business. So, in terms of export, you are a two-star export house and have some global footprint. So, just wanted to understand what is the export revenue mix today, and how do you plan to grow the exports in future?
Sorry, could you repeat once more?
So, just wanted to understand the export revenue mix and how do you plan to grow this export share?
So, it's, I think, slide number, so it's there. We have almost, so we've given a continent-wise exports.
Okay.
There 51% is in Europe, 27% is in South America, 17% is in North America.
Okay.
Is that your question?
Yes, correct. So, sir, just wanted to understand in terms of geography, which are the geographies you are targeting, specifically in future?
We continue to remain the market leader in Europe, and that is where we will continue to further increase. There is a significant focus on North America, and as I said before as well, Japan is at a very nascent stage, but it will continue to rise over the next years. It is a very big opportunity.
Okay. And sir, recently with the acquisition of this Valex, just wanted to understand what is the expected incremental contribution you are looking for in terms of revenue and margin for FY26?
Just 1 second. Because I'm already entered into so the incremental revenue should be about. I mean, I think it's better that we come back with exact numbers. So we'll send the exact numbers to our factors on this.
Okay. And sir, in terms of this product diversification, is there any plan to have the new product line? I mean, in terms of more value-added product or packaging or specialty kind of fabrics that you plan to roll out?
You're talking about non-wovens or FIBC?
Yeah, non-woven, yeah.
So in non-woven, it's a completely different product line, and that is all specialty technical textiles and of high value added category.
Okay. Okay. And sir, can you throw some light on the CapEx which you have planned?
So we have planned 106 crores of CapEx, 105 crores, out of which 47 crores is into the existing business line, which is FIBCs, increasing its capacity and some automation in the warehouse. And 57 crores is in non-wovens, which is a completely greenfield project.
Got it. Got it. And sir, one last question on the ESG part. So, as you know, the packaging is increasing the environmental regulations, like plastic use and recycling, how we are going to recycle the plastic and all. So how are you preparing for the regulatory shifts? And what share of your offering are there in terms of recyclable or bio-based material?
So 100% of products that we manufacture are recyclable.
Oh, wow.
We also offer products that are made out of 100% recycled products as well. So there's a regulation in some European countries where 30% of it needs to be recycled. So we have been following that regulation for a couple of years now.
Got it, sir. Thank you so much, sir, and all the best for the future.
Thank you. Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask question. The next question is from the line of Vikrant Sahu from RK Advisors. Please go ahead.
Very good afternoon. I just have few questions. Like we have seen there is an income growth of 20% year on year in H1 FY26. So how is the demand trending across the domestic and export sectors in year on year as well as in quarter on quarter terms?
So mainly the growth is coming out of exports only. Domestic, although the demand is more, but our focus remains exports because the margins there are better. So I would say that the entire growth is coming out of exports.
And also, what contributed to Europe maintaining a 51% share of exports? And are there any plans to diversify geographically?
Europe's share in exports reflects KPL's strong customer base and demand for high-value products. Going forward, the company is pursuing geographic diversification through deeper penetration in Asia and Africa, as I mentioned, Japan and South Africa and the Northern African countries. So that will ensure sustainable growth with a more balanced portfolio.
Okay. So, and also, what are the company's medium-term growth priorities like organic capacity expansion, product diversification, or global integration?
So, medium-term priorities, they remain on scaling the capacity, and that's why the CapEx, expanding its value-added product portfolio, deepening global integration through the means of acquisition and hiring of more professionals there. These initiatives together will enhance profitability, resilience, and long-term value.
I have few more questions. Like how is KPL leveraging its brand Bharat identified to strengthen relationships with multinational clients and expand export share?
So, I mean, we are positioned at a very good time with the Bharat brand in the global market. Everybody identifies with it. It underscores the strength in quality, reliability, and operational excellence. With the growing global reputation of India, the company is deepening relationships with multinational clients. They have started looking at India in a very, very different eye. And this is what is expanding the export share.
Okay. And one question is from the operational part. Like which export regions or product lines are driving the sharp recovery in volumes and profitability?
So it has been exports and FIBCs.
Okay.
And and it's mainly coming from Europe with the higher value product sales.
Yes.
And there has been a pressure on North America due to the uncertain tariff, But the focus on diversified geographies is helping us maneuver this.
Okay. Thank you so much, sir. I got my
Thank you.
answers.
Thank you. The next question is from the line of Rohan, an individual investor. Please go ahead.
Yes, thanks for the follow-up opportunity. Just pardon me if I have missed out on this. Sir, I just wanted to know regarding your non-woven project. So when will this project will start and the facility will be commissioned? And like how much time will it take us to reach, the 120-130 crore top line that we are projecting on 58 crore of capex?
So we projected 120 to 125 crores of top line. That is first thing. The 100% capacity utilization, or let's say 95% capacity utilization, should come out in FY28. 80% of it should be achieved in FY27. And H1 next financial year, we should be able to commission the plant. And H2 next financial year, we should see the revenue start coming in.
Okay, so from H2, the revenue will start coming.
Correct.
So within like 6 period of time, we'll be able to ramp up to 80% capacity utilization. That's what you were trying to say.
So the H2 would be about, let's say, about 30% of the 100% that I'm talking about. Right? So let's say 30 to 35 crores of revenue. And
Okay.
And FY27 should be about 85 to 90 crores. Yes. So we should be able to achieve that number.
I'm just getting a bit confused. So for FY27, whole year, what are we trying to, like, the facility will be coming from H2.
Sorry,
The revenue generation will be.
So because I'm a non-finance guy, I sometimes mix up with finance numbers. So 26, 27, our sales will be, so sale value kahan likhi hai? 39 crores is what, 30 crores is what is expected in 26, 27, 92 crores in 27, 28, and 28, 29 should be about 102 crores. Yeah,
Okay.
those are the numbers.
Okay. So, sir, when we are saying like we'll be doing 35, 36 crore in FY27 and out of 120, 130 crore that we have targeted. So, sir, do we have any, have we just started with, client addition, or are we in talks with clients, or how are we going to, do the sales and business development of this initiative?
So for the last 4 months, we had been mapping all the customers and the distributors for this. So the sales and distribution plan is ready for 2027-28 on how we want to do and which customer is what we want to touch, who are the people we want to onboard. So work's going on in that direction.
Okay, sure. Yeah, that was from my side.
So there are two aspects to the non-woven business. One is the customer, and then the other is also the quality of the product, which is extremely pivotal in this. And R&D has been going on in the last couple of months on this, and we will continue to do that because it's a highly technical product.
Got it. Okay, sure. For more questions, I will get back to you.
Yes.
Thank you.
Thank you. Ladies and gentlemen, as there are no further questions from the participants, I hand the conference over to the management for the closing comments. Over to you, sir.
I would like to thank everyone for joining in and giving in this time. We will continue to do the investor calls after each board meeting. You could reach out to Adfactors for any queries further on. Thank you.
Thank you. On behalf of Kanpur Plastipack Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.